guys, Drew here from swingtradingbootcamp.com, and what a week in the market we had. If we go back to last week's video, we were at this point here on the chart. I showed you the chart of how the diamonds broke through this short-term uptrend line, and now you can see these black lines here are a little bit longer-term trend lines, and we've now put in a sell-off that has broken through all levels of trendline support. In last week's video, I told you that at this point here we were looking for news to come out in the market. That news came out later Sunday evening, and we got a reaction in the market that I don't think many people expected. But we sold off literally straight down for the last 5 days. Here's Monday, Tuesday, and all the way to Friday. Some real panic setting into the market, some big time volume coming in, as you can see here. These sectors just got rocked. Last week we pointed out some strong and weak sectors, and we also said that if the weak sectors got weaker and the strong sectors transitioned into weakness, then that would be a defining point in the market, and that's exactly what we saw. We saw the strong sectors that we mentioned last week, like the XLE, that was holding up near its yearly high, just come in and sell straight off. Look at the huge volume coming into the market here in these sectors. The OIH was the other one that was holding up above its 50-day, and we really just got a straight down sell-off. Again, perfect volume chart. Now these aren't the sectors that we were looking at once the news came out. We were looking at obviously the inverse ETFs a lot to look for some trades. Here's the inverse energy, the inverse oil and gas ETF, and these are two that really went from their lowest point. Remember, these are the inverse, so they went from their lowest point actually breaking out to new highs here. So a big week in the market. One thing to take note of that I want to mention before I forget is as we approached going into Wednesday, you're going to see a lot. If you look through your charts, you're going to see a lot of charts that were stalling. The volume kind of was declining, and a lot of the sites and newsletters and blogs that I read, a lot of the traders that I was talking to, they're anticipating a little bounce here after Wednesdays. You see this reversal bar. We opened here, we sold all the way off, and then we pulled way back up. The volume was actually declining, and we got a larger volume reversal here. So there's a lot of people that were saying that they were going to trade that bounce. Now, it's just not our style here at Swing Trading Bootcamp to trade against this kind of major trend. Some of the charts that we did see, here's a chart of the spiders. This Again, here's the Wednesday chart. We had a decent sell-off. Even in last week's video, I told you that we were reaching short-term oversold levels, which you can see here. But that doesn't mean that a market or an individual stock can't become more oversold or overbought, for that matter. So we, first and foremost is to trade in the direction of strength. And we've said this several times in our classes and on our blog, there's a lot of ways to make money in the market. And just because it's not our way to do it doesn't mean that you can't do it. And what I mean by that is, trading these type of oversold condition on bounces. If you have a strategy that's developed and tested, and you're confident in your method, by all means, I'm not recommending that you don't do it that way. What I am recommending is don't just follow blind advice. And you see a lot of like I said, the blogs and a lot of news out there was saying that they were anticipating a short-term bounce here. So if you're getting long, when sellers stepped back in force on Thursday and Friday, you were probably stopped out, or at least you took a lot of pain. So remember, the context of the market is key, at least in the way that we trade. When we saw the breakdown on Monday, even looking back at these strong sectors, when we saw this breakdown and then Tuesday's confirmation that the volume was stepping up here as we increased down through the 50-day, that was a big sign for us. And we're not going to counter trend trade that market. Here's Monday. Tuesday, you see the volume kind of slow down as you look at the S&P, but every other sector, the volume was increasing on the sell-off through a support level like the 50-day moving average. That's a sign for us that we don't want to anticipate a bounce in the market on oversold levels. We don't want to counter trend trade that. We want to wait for a situation get on the right side of the market. So we began looking at the inverse ETFs, of course, and all the strong stocks that we mentioned last week. Were really showing us signs that things weren't so good. One that we mentioned was Jazz. You see the 5-day real sell-off in the market that takes Jazz all the way back to its 50-day again. So at this point, when you see this market, it's obviously oversold. Could we get a bounce? Of course. Could we continue to sell off in state of panic that we're in? Of course. But what we don't want to do is step in front of a freight train. So trying to time a bounce here is not on our agenda. We're looking now for the market to continue doing what it's doing now. Once it decides that it's sold off enough, we're going to see some sort of bounce or retrace in the market. That's when we start to evaluate our sectors and our positions again. When we see, whenever we do, a sort of retrace back towards the 50-day, we're going to evaluate, like we always do, how certain sectors are holding up. We're definitely now in a very bearish environment, so we will be looking to mostly the inverse ETFs and watching how they do on their next pullback. SKF has broken out to new highs. FAS has broken out to new highs. So after this breakout that you see, okay, you can now look for some sort of move once the market stops going down for these inverse ETFs to put in some sort of pullback here down towards support, whether that be this breakout level towards the 50-day, or it may just pull back very shallow and start to rip again. So you have to be on your game as we move into next week, watching these stronger sectors. We are just trading the short side as of now. We're not going to look for any longs, and we're not going to short-term trade any oversold bounces. Just not our style. Again, not saying you can't do it, just not the way that we do it. So what will we do from here? We will start to look again at some of the inverse ETFs. The real estate ETF has basically put in a short-term double bottom here and just absolutely ripped from 13 to 18. We get a pullback here. We're looking at all of these sectors for their next up move. The ultra short semis, we mentioned this last week, that is actually trading down. Mistakenly, I said to a 52-week low. I believe it was a new low for the year. But in any case, we have now put in a lower high here, and now a higher high, taking out this most recent high here in the inverse semiconductor ETF. So once again, these are some of the sectors that we'll be watching. We'll, as always, whittle these down into a list of individual stocks that we'll be watching as well within the weaker sectors, and look for some good short-term setups to trade once the market stops, pulls back a bit, and starts to resume its trend. We hope, again, you found our videos useful. Please feel free to visit our blog at swingtradingbootcamp.com. Until next week, good trading to you.